Hey guys, today I wanted to talk about the highest daily traded ETF out there on the market. This ETF has been traded almost more than 50 million more shares per day on average over the past 3 months than the second most traded ETF on the market, and almost 100 million more shares are traded of this ETF, more than the most popular S&P 500 ETF. I also want to highlight that if you would have invested in this ETF way back in 2000 and about 2012, about $10,000, if you would have invested over the course of the next 12 years, this ETF would have outperformed the QQQ in the red and SCHD in the yellow. After about 12 years, your $10,000 in this ETF in blue would have blossomed to about $400,000, and QQQ, your $10,000 investment, would have blossomed to about $60,000, and SCHD would have been about $40,000 in 12 years. The average cumulative annual growth rate was 41% for this ETF, almost 20% for QQQ, and 13% for SCHD, where the best years and the worst years are listed as is right here. What I'd like to do in this video is compare these three ETFs and then do a historical comparison over on Portfolio Visualizer and show you the numbers over there. Come over to my compound interest calculator right here and do a quick analysis of this fund versus QQQ. Come back over to my compound interest formula and then do a speed test. How fast can I reach $1 million in 10 years? How much does my monthly addition have to be for this fund right here? How much does it have to be able to reach $1 million in 10 years? And then I'd like to talk about some things to consider. Your daily impulsiveness, how impulsive are you to check your stocks on a daily basis, what the market direction is looking like, and then your personal style of investing. All these things to consider if this is the right ETF for you. So the ETF we are talking about is ProShares TQQQ. Important considerations for TQQQ is this is a leveraged ETF. It seeks a return that is 3 times the return of its underlying benchmark or the NASDAQ 100. Target for a single day, as measured from one of the net asset value calculation to the next. Investors should monitor their holdings as frequently as daily. Investors should consult the prospectus for further details on the calculation of the returns and the risks associated with investing in TQQQ. The common uses for the magnified exposure: seeking magnified gains. It will also magnify your losses. Getting a target level of exposure for less cash. Overweighting a market segment without additional cash. So what I'd like to do is do a historical comparison for these three ETFs over back on Portfolio Visualizer, and what we did was go to the farthest year back that we could was 1985, but it didn't take data from 1985. It started November of 2011 because one of these three funds, that was its inception date. So what we did was took 3 portfolios of 100% each of the 3 different assets, started with $10,000, had no new cash flow, and this is what we would have in about 11 to 12 years. You can see TQQQ, the cumulative annual growth rate was 41%, which would have taken our $10,000 to about $412,000. QQQ would have been from $10,000 to $60,000, and SCHD would have been from $10,000 to $40,000. So you can see the best year for each of these ETFs and the worst year. Next up, let's do a compound interest comparison with these 2 different funds right here. So this is my compound interest analysis spreadsheet, and you can grab a copy of this spreadsheet if you would like over on my Patreon under my Future Value Workbook. If you join, you'll have access to each 3 of my different spreadsheets that I have: my dividend portfolio tracker right here and my budget tracker right here. But back over on my Future Value Workbook, we have TQQQ versus QQQ, and the inputs are the yellow and the greens are the outputs, and we're looking at the output of what our portfolio value would look like over the course of 10 years, what type of income we could expect to receive. But since these are not necessarily dividend type of ETFs, we'll go ahead and skip this section for now. And then we have some long-term graphs for our Fund 1 and Fund 2. Back over here, if we go ahead and fill in our yellow highlighted sections, the expense ratio for TQQQ is 0.95%. We already have QQQ's information inputted into the calculator. We take a look at their monthly edition. Let's go ahead and just do an average of $500 a month, their annual growth rate. Now these numbers right here, just pulling from some of the certain data that we have down here for the historical growth rates. It's just their price performance only. So if we take a look at their 10-year CAGR numbers, we're looking at 41% for TQQQ and 17% for QQQ. So if you are looking at projecting an annual growth rate for these separate funds, you could probably choose a number from anywhere from 30 to 40% for TQQQ, and for QQQ probably anywhere from 15 to 25%. Let's go ahead and go on the lower end here. Let's go 15% for QQQ and 30% for TQQQ. Let's say you started at 20 years old and you reinvested any dividend that you received, where this Fund 2 does give you a slight dividend at 0.5% dividend yield. So we will reinvest that dividend with a $0 balance and $500 a month. This is what your portfolio would look like after 1 year, 2 years, 3 years, 4 years, 5 years, 8 years, and 10 years. TQQQ would be giving you about $276,000 and QQQ would be $132,000. Let's say QQQ or TQQQ, the leveraged fund, did hit that 40% per year as it has in the past 11 to 12 years, and QQQ hit that 20%. Then you're looking obviously at inflated numbers over here on your graph. Let's say you were a little bit older and you were 30, and the average amount saved for retirement for someone who is about 30 is about $40,000. So if you were 40 years old and you had $40,000 in your retirement savings, you could expect to hit, in about 10 years, you hit that $1 million figure and beyond with Fund number 1. And Fund number 2, you would hit almost $500,000. Let's go ahead and say you are 60 years old. You are of the older group that watches my videos. You probably have somewhere between $100,000 and $200,000 saved for retirement. That is about the national average for someone who is about 60 years old. So let's say if you're watching these videos, you're probably a little bit more proactive for your retirement. So let's say you are on the higher end of $200,000. If you were 60, let's say you wanted to hit that 60-year-old, or let's say you wanted to hit retirement at 65 years old, your $200,000 with $500 a month deposit in TQQ with a 40% growth rate each year and a 20% growth rate each year, you are looking at $1.1 million for TQQQ and $500,000 for QQQ in about 5 years. So that is just a quick comparison of taking their cumulative annual growth rates. Now we know that we can't expect every time that you put your monies into your portfolio, you can't expect let's say over a year basis for QQQ to hit that 40%. That's not a good weight or approach to look at it. Now there's a few things I want you to consider when investing in TQQQ. So let's go ahead and take a look at their most recent 30-day daily numbers over here on TQQ's website. They have a daily return running chart right here for Q3 in 2022. So this in the dark blue is TQQQ, and in the light blue is just the NASDAQ 100 index, or ideally QQQ. So the point I want to make here is your daily impulsiveness. I want to make sure that you're aware that As you see TQQQ start to go down, let's say you were impulsive and you quickly just sold maybe right here, and you didn't allow your funds to be in the market on July 12th, July 13th, 14th, and 15th, well, you just missed out on, if you're starting here at -7% and you ended up 3 or 4 days later going all the way up to a +5%, well, you just missed out on a 12% return, cumulative return over the course of 3 days. Maybe you jumped back in TQQ here or right here. Well, your returns would have only been half. That is one of the problems that I see with TQQQ, is you may try to time the market and then you would miss out on some of the positive daily returns. Let's say you see it start to go up right here and you don't sell at the top. Obviously it goes down, you would miss out, your funds would obviously go down. So obviously you can see the danger of trying to time the market with TQQQ. So that comes into my next point. You'd have to look at, if you were to invest in TQQQ, what does the market direction look like currently? So what I mean by that is take a look at the long history of TQQQ over the past 10 years. What I mean by market sentiment is take a look at the news. How are people feeling about the stock market as a whole? What is the fear index currently for the market? If it looks, the fear index it looks very positive and there is not very much fear in the market, then TQQ, it's probably time to go ahead and invest, because you'll have a long period of gains or increases for TQQQ. If the market sentiment looks like there's a lot of fear and there's recession and there's rate hikes and things like that, as we've had in 2022, then it's probably time to not invest into TQQQ. If you take a look, TQQQ peaked at around December of 2021, and almost for the entire year, you can see there has been a massive decline. So if you would have not gotten out of TQQQ, if you would have held on and not looked as they suggested on the website, look at TQQ on a daily basis, then you would have dropped all the way back down to a value of $32, $22 per share, which would have taken you all the way back to the same value of about June 2020. So all those gains you would have lost if you would not have followed the market sentiment. So that's just something to consider for TQQQ. What is the overall feeling or direction of the current market? And then the last thing to consider is your investing style. Is TQQQ really your investing style? Do you want to sleep at night? Do you want to put your head on the pillow at night not knowing if the market is going up or going down, if TQQ is going to go up 3 times the NASDAQ 100 or down 3 times the NASDAQ 100? If you recall, over here on a portfolio visualizer, the best year TQQQ had was about 140%, and the worst year was a -60%. Now, if you are not timing this correctly, you can have some major losses and not have any of the major gains. So that's just something to consider. What is your investing risk? How risky do you want to go with your investments? So that's all I have for this video. If you guys are interested in my comparison calculator here, TQQQ versus QQQ featured in this video, you can do any different type of ETFs or stocks right here. So let's say we typed in VOO or SCHD, you would have the market price formulas automatically update. Then you would have to update all the things in the yellow to match your liking. And then I also have my dividend portfolio tracker over on Patreon and my budget tracker. So if you guys are interested in that, head over to Patreon and join and get access to all my spreadsheets. With that, head down into the comments and let me know if you are going to invest in TQQQ. And with that, thanks for watching.